Do ba da 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 da. Do 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 do. How long is that going to take? 10 of that noise. I gotta start my webinar in 5 minutes. You can definitely hear that in the radio. Over the microphone. I'll just let all the viewers know that my wife is making herself a chicken sandwich. What do you mean?
You get your desk. Why is this my problem to get your desk? What you're talking about?
Do 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 do. What? Alright, we're going to get started in about a minute here. Alright, I'm about to get started. I apologize if you hear any crackling in the background. That should end in about 1 or 2 minutes. One of the The benefits of this year for me has just been being able to travel around the country and stay in all these different places. The downside is I can't always choose exactly where my work spot is. So, there was a while there where I was trading in a garage. Right now I'm trading in the kitchen. My wife is almost done making her chicken sandwich. It's going to be done in about 1 minute, and then that crackling is going to be over. So I apologize for that. But let's get started here with our disclosures. So it's the weekly market update. It is February 9th, 12 o'clock Eastern time. I'm out here in Idaho. It is 10 o'clock local time. So prop trader market update. Quick disclosure here. I am an SEC, I'm a member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. All right, quick position disclosure. I mentioned a couple weeks ago that I kind of sized down across the board. That's still true. I still have obviously a lot of positions on. I think I'm in 19 positions right now as we are doing this week's webinar. They are primarily to the long side for good reason. The market's trending higher. The market's been going up basically every single day. I'll talk about charts here in a minute, but I believe that the S&P went up 7% over the course of the last 6 trading sessions. That's an incredible run. I keep telling my team every single day, you want to err on the side of the longs. So that's why I am primarily long. There's a lot of rumblings underneath the surface of things that you might want to be worried about right now. But until the technicals give us some sort of confirmation signal that the market is about to change, we just want to continue to err on the side of the longs. I'm going to talk about that here in a minute when we start looking at charts. Real quick, my background, I've been doing these webinars for a year now, so everyone knows me. I am senior trader and registered principal at T3 Trading Group. Been with T3 for a decade. I've mentored well over 100 professional traders here at the company. I'd be curious to know what that real number actually is. Just being safe, it's over 100, but it's probably a good bit more than over 100. Currently managing a group that is also probably double what this number says, 50 plus traders, but it's probably 100 plus traders at this point. My spare time, I'm big into martial arts, I'm big into skiing, went to Jackson Hole, skied Jackson Hole over the weekend, about 45 minutes away from there. The snow out here in Wyoming and Idaho is awesome. If anybody's a skier, those are basically my passions in life, right? Markets, skiing, martial arts, that about sums me up. So here's my email address. Today I'm going to be talking about markets. That's the purpose, right? I'm talking about markets, going to give my weekly market update. What I try to do every week is I try to impart lessons to all of you webinar listeners so you can improve your own trading on a week-by-week basis by following along with kind of what I do, and it's just a little bit of a hint into what I do with my professional team on a day-to-day basis. So I'm going to be talking about markets. I'm going to be talking about T3. T3 has retail trading accounts with professional proprietary trading accounts. I'm going to be talking about that after we go to the charts. So let's do it. Let's go to the charts. Here's my 5-minute of the NASDAQ, the triple Q ETF between yesterday and between today. Let's go to the SPYs and let's go to the daily chart. So what I just mentioned a minute ago when I was starting the webinar is that the move that we have had over the course of the last handful of trading sessions from a week ago Monday to today has been nothing short of absolutely incredible. Pre-market, if this chart here showed us the futures market, pre-market a week ago Monday, we were at 365, the equivalent of SPY 365. Now we're having this conversation a week and a day later. Markets had a very slow consolidation day today at 390. That is an incredible move. First of all, we were able to recognize this short-term short trade at the end of January. This was a result of hedge fund de-risking because of the short squeezes that had occurred in GameStop, Best Buy, AMC, BlackBerry. All of those Reddit stocks led to a 3-day de-risking. where we were able to hedge ourselves and short some things to be able to make some money on this. The interesting thing is just how fast this snapback was to all-time highs. And that's where we are sitting right now. We are at all-time highs in the S&P, all-time highs in the NASDAQ, all-time highs in the Russell. It's been an incredibly bullish market. Now, one of the things that you need to recognize if you're trading for a living is you need to have an understanding of when you have an advantage in the market and when you don't have an advantage in the market. And this is one of my big trading themes that I emphasize to my team regularly. Like, I'm able to break down all of my own trading into a set of rules, right? Rules are what breed consistency, and into a set of themes that I think are necessary for success in trading markets and in managing yourself in the marketplace. One of those big themes is that not every day is created equal, right? Some days there is a tremendous amount of opportunity in the entirety of the marketplace. You could trade SPYs, you could trade Qs, you could trade names that are correlated to the market. And some days there is much less opportunity. Not every day is created equal, and therefore you cannot trade every day the same. This is part of game planning, right? One of the things I do in my morning meeting every day with my team of professional traders is I come up with a broad game plan for how we are going to approach the market for that day. And over the course of that game plan, we're trying to discuss, should we be short focused or long focused? Should we be short time frame focused or long time frame focused? Should we be aggressive today because there's a ton of opportunity? Or should we be more passive today, more sitting on our hands, more being patient because we don't view the market as having that same level of opportunity? These last few trading sessions today included, as far as the market goes, now there's individual stocks that we could look at where there's been a lot of opportunity. But these last few trading sessions, today, yesterday, Friday last week, these are days to sit on your hands as far as the market goes. It's very difficult. Why is it difficult? Let's break it down. So the last 2 days in particular, we had gap ups in the market after huge moves. I believe that the move from lows to highs here, especially if you're including this pre-market low, is that we've moved about 7% in 6 trading sessions. That's an incredible bounce from this low. And what that did, it brought the market from being slightly extended to the downside to being decently extended to the upside. So extension is one of the things that I pay attention to in the marketplace when I am coming up with my game plan, trying to decide how aggressive do I want to be. Do I want to be long focused? Do I want to be short focused? Well, first of all, do I want to be long focused or do I want to be short focused? It depends on certain scenarios. It depends on time frame. But very broadly, it's obvious I want to be mainly long focused. Why? Because we are trending higher. And the rule about market trends is that they tend to last for much longer than people expect. Now, there's plenty of things that you could point to under the surface of potential problems that could pop up, that could start negatively impacting the market. But the fact of the matter is, if any of those are going to come to fruition, the market's going to give us some sort of technical signal. That technical signal is not there yet. We are in an uptrend in the S&P. We are in an uptrend in the NASDAQ. We are in a massive accelerated uptrend in the IWM that represents more mid caps and small caps. You can see how strong XLE energy has been recently. XLE picked up in a really big way going back here in November. The price of oil is back to, I think, highs from before the crash, right? And if everyone remembers, in the heart of the coronavirus crash, oil actually went negative. Incredible. It's never happened before. And now I think WTI is like above $60 a barrel or something like that. So you see XLE getting a big bounce. You see XLF getting a big bounce because interest rates have gone up, because the yield curve has steepened. So do I want to be erring to the side of longs or do I want to be erring to the side of the shorts? I want to be erring to the side of the longs. But do I want to be chasing market gap ups after a huge move when the market is now extended to the upside? The answer is also no. We're not so ridiculously extended I want to be looking for shorts, right? which is what we were doing here at the end of August and the beginning of September. The market went completely parabolic. This is the SPY, went completely parabolic into the end of August, beginning of September, and these last several trading sessions here, the VIX was actually rising while the market was rising, which was a warning signal, and we were shorting into this and did really well with this pullback. We don't see any of those signals at this point. Yeah, market's a little bit extended, so it means I don't want to be chasing longs up here. You had plenty of time to add your longs into this area between 370 and 380. Do I want to be chasing longs when the market gaps up 0.5% like it did yesterday to right below 390 when it was just at SPY equivalent 365 a week prior? The answer is no. So what is the broad game plan of the market right now? It is to err on the side of the longs, but to be primarily patient and sit on your hands. When you have extension, which is what we have right now, so the way that I measure extension is by where the market is trading versus the space between the 8 and 21 EMA. The space between the 8 and 21 EMA is the space that I consider to be technical equilibrium for the marketplace. And then you can have a market that is extended above or below that, and there's degrees of extension. Technically, even if the price action is 25 cents above the 80 EMA on the SPYs, I would say that the market is extended by a very, very small amount, right? 25 cents in a $300, $400 ETF is basically nothing. And the further it pulls away because of the degree of speed of the move, and this has been a very fast move, the further it pulls away from the 8 and 21 EMA, the more extended it actually becomes. So yesterday we closed at 390.50 in the SPYs, and my 80 EMA at that time is basically at 384. So I could say that my market, the SPYs here, are extended by $6.50 as of yesterday's close. Now that is not so extremely extended like what we saw at the end of August and the beginning of September that I want to start looking at shorts. The short trade is very difficult right now. You're shorting a really strong market, albeit even though it's a little bit extended. So it's not so extended here that I'm getting a signal that I should be putting on short-term shorts or hedging myself. But we're too extended for me to be buying at this point in time. So again, think about this, right? Game planning. Every day is not the same. Opportunities every day are not the same. When the market is not so, I don't want to short, but I don't want to be buying, well, what do I want to be doing? I want to be sitting on my hands primarily. Now, the beautiful thing about being an equity trader is that even if my market's in a difficult place, I've got a realm of thousands of equities that I can go to that are listed on the New York Stock Exchange, NASDAQ, or Amex. Thousands. And even if the market looks out of play, there's almost always something where I can find opportunity in. Something that had news, something that reported earnings. I mean, it's earnings season right now. Or something that's giving me a better technical setup in the marketplace that I could potentially look at. One of those things I really liked today was NEO. NEO was my idea of the day for my team. This is what I like. And I didn't have a lot for my team this morning. Again, some days in the morning meeting, I'm super pumped about the market. There's so much opportunity. I've got 15 stocks that I'm looking at that I potentially want to be involved in. Today I had very few. My idea of the day was this NEO. Whereas the market, I need this market to reset up. It's extended. I want the market to price correct, that can reset up for me, make another higher low, or time correct, go sideways, create a bull flag that becomes a new setup for me. Right now the market has no setup. NEO did. NEO, which I have a position in, I've been in this thing basically since this breakout back here at $15. This thing has now created a very tight range with support at the $55 area and resistance at the $60 area. So the idea today was that we were looking at NEO long in the area between $59.50 and $60. They actually made it pretty difficult today because they ran it so hard to 60 right in the first 5 minutes of the day, basically. So this is today's price action right here. So second 5-minute bar of the day. We just put in a low. Keep in mind it's a $60 stock. We just put in a low of 58.24, and now 5 minutes later we're about to break through 60. If 60 is your price trigger point for an entry, you got to be looking at this thing when it approaches 60 going, well, if I buy 60 right now, where does my stop loss have to be? And what does that mean to me from the perspective of risk reward? Carl, I see your question there. I'll get to you in a bit. What does that mean to me from the perspective of risk reward if I'm buying $60 in NEO today? Well, where do I got to give this to on the downside, right? Whenever I'm looking at entering into any trade, where is my risk? That's the first question that I'm asking for myself. My formula basically goes like this. I figure out how much space I need to give it to from my trigger point entry to where my stop loss would be. If you're looking at this chart, forget about all this later price action. If you're looking at this chart as it's approaching 60 and you're saying 60 is the spot I want to buy, at what price will I know that my idea is wrong? That's where I want my stop loss to be. The answer to that question is the low of the bar in which 60 breaks. You can see the high volume here, right? So I know that if this stock ever gets below 58.50 today, that my idea was wrong, right? And again, the thought process behind this is, if this thing fails, gets below 58.50, what do I know about this candle here? And I call this an ignition bar. An ignition bar is a candle in which a breakout occurs. What do I know about this candle? Well, it's on very high volume, and it's basically what I call a positive Maribozu candlestick. What I know is a lot of people just bought the stock, right? What's the volume on this candle? The volume on this candle is 3.7 million shares. I basically know that there are 3 million shares of buyers coming into this trade here. And if it ever gets below the low of this candle, 58.50, I know every single person who just bought the stock in that period is now out of the money. What do people do when they are out of the money, when they're losing money? They do one of two things. They hope or they pray, or they sell. Hope and pray being one, and sell being the other, right? They either hope and pray, please, let my position go back to my price. I don't want to take a loss. That's not the way you want to do things. Or they admit that their idea was wrong. They take their loss, they lose their risk, and they move on. This is the price where I know that I'm wrong. So the issue is, it's $1.50 of room. I would prefer, and again, the market doesn't always give you the ideal scenario. As a matter of fact, most of the time it does not give you the ideal scenario. Once in a while it does, and you got to pound on that. But I'm looking at a $60 stock. I got to risk $1.50 in it. What's my reward potential on this NEO? Well, even though NEO is a $60 stock, we know it's a momentum name. We know that this thing can really go when it wants to, especially if you're looking at more of a multi-day swing position. It's reasonable, I think, for NEO to break out of 60 and work its way up to $75. That's what we've seen in previous appreciation movements in this stock, $10, $15 moves. But still, on the intraday in and of itself, to come in and risk $1.50 in NEO, what do I think I can make by the end of the day? Maybe I can get a move to $63. Maybe I can get 2 to 1 on my risk just on the intraday. That's not really ideal for me. For the most part, if I don't think I can make 3 times what I'm risking, I'm not really interested in the trade. But because I do everything based on daily charts, this does have the potential to become a swing trade. If it becomes a swing trade, it could potentially increase my reward scenario there. So it gets me a little bit more interested. So the way that I choose how many shares to take is based on how many dollars I want to risk. So I know that if I got to risk $1.50 on this trade to really trade it properly, that every 100 shares I take is $150 worth of risk. Well, how much do I want to risk on this trade? If I want to risk $600, if I want to risk $600, I could take 400 shares in this, right? So that is the formula on how many shares do I want to take. I need to know my space risk, and I need to know, so that's what I call space risk, the price between your entry point and where your stop loss is going to be. I refer to that as space risk. And I need to know my dollar risk. Dollar risk is, well, how much is this trade worth to me? Is it worth $100, $500, $5,000? That's dollar risk. And then it's just a math formula, right? My space risk, my dollar risk leads to my tier size. If I gotta have $1.50 in space risk and I want to risk $600 in it, I therefore take 400 shares. It's trader math. Stock here was extended through that 60. It built out this over time, and then it broke up. Then I can utilize my trailing stop rules to raise my stop to this low. It works its way higher. It kind of pivots here. It makes another higher high, higher low, higher high. I can then raise my stop to this pivot. I know that some people utilize trailing stops where it just trails based on an amount. And maybe certain systems, softwares even allow for that. For example, like, okay, my trade's working, so I just, if it ever declines by 40 cents, I'm gonna get out. And maybe you can even do that on a percentage basis. I hate that because you're making the market subjective. You're making it about you. 40 cents is what I want to give it. Or if you're buying 60 here and you go, well, I don't want to risk $1.50. I want to risk 25 cents on it. Well, it's not appropriate for the trade. The trade tells you how to trail. The trade tells you where your stop loss is going to be. So for me, for my trailing stop system, for my rules, I basically have 3 rules for trailing. I'm not going to get into that too much for today's webinar. Maybe we could do that on a different webinar. For me, I trail based on pivots, what I call ADMA catch-up, meaning I need that moving average, that ADMA, to be at least the price of the pivot, so that's satisfied here. And then I need a new high to come in, because the definition of an uptrend is a pattern of higher highs and higher lows. So all 3 of those criteria are met. I can raise my stop from 58.50 to this low here and continue to do that over time. And then if this closes well, it can become a swing position. What I want to do, and this is another one of my big themes, right? So one of the major big themes we're talking about is knowing when to trade, is knowing as important as knowing how to trade. And another one of my big themes is, again, just having a rules-based approach for what you're doing. Everything needs to be based on these specific rules that you have where you're listening to the message of the market. The rules are what breed consistency, right? If you are doing things haphazardly with the market, you by definition cannot be consistent with it, right? The only way you can have consistent profitability is by having a consistent approach. The only way you can have a consistent approach is by having rules for everything that you do. So that's NEO today. It was kind of one of my ideas of the day. It's definitely something that I'm paying attention to. SPYs right now, I think, are in a less is more type of scenario, which is one of the things that I've been emphasizing to my team. And look, it's honestly, it's made trading a little bit more boring the last couple trading sessions. But that's just how it is sometimes. Sometimes it's exciting and there's so much going on. Sometimes you got to be able to sit on your hands and the opportunities are not really there. Some of the other names that I'm looking at today, I'm looking at this LOTZ, L-O-T-Z. This thing, whereas everything else is extended to the upside, this thing got so extended to the downside. One of my teammates likes it at these prices as more of a fundamental play. My ADMA is basically a $10 stock at $8.66 today. A $10 stock that's extended by $1.50 to the downside is an incredible amount of downside extension. So I was coming in, I was buying some stock below $9 today. I was able to capture this move, so that's kind of on the radar as well. MGI is one that I've been pounding the table on for a while, as have some of my teammates. We were first looking at this thing back here at like 350. Give this incredible uptrend, this beautiful bullish wedge in here for further continuation, then had a bigger price correction, built out this pattern here with $7 as the area that it needed to close above. It was finally able to do that on the last day of the month. So we were really building into an MGI position here. That one's now worked out really well. I've had a price target in this thing that I'm working towards for like 17 bucks. I don't think that it is the spot here to be able to buy that now. Happy to talk about GME. So GME is actually at a spot where it's basically a value play almost. Again, I spoke about this GME probably the last 2 webinars. And what I was saying when this thing was at 300 and change, when, you know, I did a webinar, I think it was up there, the pre-market high one day was 520. GME doesn't belong at those prices. But I got no problem with you owning it. That's your decision. There should be no one out there. This is a free marketplace. The brokers that restricted your ability to be able to buy GameStop at $350 if you want to, shame on them. If you want to buy a stock that's worth probably $50 at $350, that's your business. And I'm all for the movement. What I was telling my team was probably the fundamentals are going to catch up to this stock at some point. I really think that this company actually has value somewhere between $40 and $50, which is actually where it's trading. It's almost a potential value trade if this thing dips any further. I don't think it has any value at $500, but if you want to own a few shares to go with the movement, by all means, go for it. GameStop has value. NOK has value. Again, it's just a matter of where. My favorite is Bed Bath & Beyond. Bed Bath & Beyond is the only one of these that I have a position in right now. I've got a decent sized position in it. I actually think this is almost a value play here at $25. This stock completely turned around their story. And honestly, GameStop did also. Again, GameStop worth $500? I don't think so. But GameStop at $40, these companies, Bed Bath & Beyond at $25, these companies have changed their story. Bed Bath & Beyond has a company buyback. They're not going bankrupt anymore. They've got plenty of cash. Both GameStop and Bed Bath & Beyond, they changed their business model towards e-commerce, which is the way of the future, right? What we've seen from all these companies over the years, let's get rid of a B for a second. Let's go to Best Buy. What changed Best Buy around? Best Buy was a company that was also on its way for bankruptcy some time ago. But they were ahead of the curve. They said, you know what? I got to change my business model or I'm never going to be able to compete with an Amazon. What I got to be able to do is e-commerce. I'm going to make my stores about, you know, if you need to come in and do a return, come here. But we're going to focus on e-commerce. And it totally changed Best Buy around. Bed Bath & Beyond, a little bit late to it, but now they're doing the same thing. You know, this company and GameStop also, which were left for dead for bankruptcy, those are not companies that are potential bankruptcy plays anymore, in my opinion. And if you got these hedge funds that are 200% short GameStop, and they don't recognize that they're in a stock that has 200% short float, and that the story of the company has changed, you know what? They deserve to get squeezed. That's what a short squeeze is. Melvin Capital deserves to blow up. They deserve to lose those billions of dollars. They weren't positioned properly. They had unlimited risk by having shorts on. So, you know, it's really interesting to see that GameStop has come back down to earth. I have been telling my team this morning that into like $47 is a potential support area, and I actually think it has value at these prices. And you can come in and look for it for a buy. Happens to be that the low of the day is just below that at $46.52. Again, Bed Bath & Beyond is the one that I have a position in. I like it a lot. The technicals need to wake up, though. This thing needs to get and close above 28. I need it to do it soon. And then I need it to work its way up to fill this gap and get back above 30. Would not surprise me at all to see this stock give a move back to the mid-30s or even $40. And I don't think it's unwarranted. Again, GameStop, $500. Come on. You know. You want to buy a couple shares to go with the movement, I can absolutely support that. But, you know, and I was an economics major once upon a time at NYU, and I learned about this efficient market hypothesis nonsense in college for like a class or two. It's not that it's complete nonsense, to be honest. It's ridiculous to think that markets are efficient all the time. I mean, just look at what GameStop just did, right? That is the definition of markets not being efficient. In the very long run, companies have a way to trade at appropriate prices versus what that company actually is. And that's why I don't like AMC. Of all those stocks, NOK, GameStop, Bed Bath & Beyond, I got no problem with them at certain prices. AMC, what is this company actually worth? Is it even worth $2 a share? Is anybody going to movies right now? And AMC is the one company that used this as an opportunity to raise money and increase their float, which is actually good for AMC, but it's bad for shareholders. More float, more shares outstanding. It's just a supply and demand equation, right? More supply equal demand, stocks going lower. So AMC, I don't like, but the other ones at the right prices, and we're actually starting to get there, could be it. Now the issue is they could overshoot their prices to the downside as well, just because they overshot it so much to the upside. You got people who are potentially trapped at higher prices who could realize losses. But at a certain point, I like the idea of kind of being involved in GameStop at these prices. I definitely like the idea of being involved in Bed Bath & Beyond at these prices. That's why I'm involved. So that one is definitely on my radar as well. So happy to discuss those. Happy that question was brought up. I see Carl here asked a question a little earlier. Would you consider vertical credit spreads that have strike prices far from the trading price are decent ideas for days like today? It's not a bad idea at all, honestly, especially if you're looking at the market in regards to what I was just saying, where we're not extended enough to short, we've had too much of a move and we're too extended to buy. That could be a way to develop some cash flow for yourself. I personally don't trade options. I understand the strategies, but I'm not an options trader. We do have options trading here at the firm. And if you're trading options as a professional, the best way to go about it is basically what you're describing. I think options are worthwhile products if you are implementing complex strategies like spreads. I think that options are worthwhile for a professional trader if you're using them to hedge or generate cash flow on longer term swing positions. I don't think that options are worthwhile if you're just a directional trader, which is primarily what I am, as a professional trader. The biggest benefit for directional trading and options is the natural leverage that's inherent in the product. Well, for me as a professional trader with T3, I'm going to talk about this in a minute, we start by giving people capital access at 20 times their account value for equity day trading and 8 times their account value for overnight positions. So my thought process has always been, why do I want to trade options, which are a less liquid product and subject to time decay, just for capital access, when I already have as much capital access as I could ever want? So that's why I don't trade options personally, but I do have people on my team that are options focused, and they're primarily doing complex options or implementing it for hedging. So that's definitely a good question there. Again, just trying to see if I had anything else specifically that I wanted to talk about today as far as positions or individual names go. I think we mainly covered it. We talked about the market. One of the themes I wanted to get across today, I have a bunch of them. One of my big themes on trading, when you're doing your pre-market game planning, you got to ask yourself, is it today a day I should be aggressive, or is today a day I should be patient and passive? The last couple days have been the latter, but we can still focus on individual names. Glad to hear that, Carl. We can still focus on individual names such as the Neo trade setup that I mentioned for today, which has worked out really well. Okay, so with that said, let's leave markets a little bit. Let's talk about T3. Okay, so T3 Trading Group. So you have T3 Live. I think a lot of people are really familiar with T3 Live. T3 Live is a separate but affiliated company to T3 Trading Group. I technically work for both companies. T3 Live is primarily an education and media company. T3 Trading Group is a FINRA registered broker-dealer. We engage in professional proprietary trading accounts and retail trading accounts. I primarily usually am speaking about the professional side here in these webinars. That's my primary focus. I'm a professional trader with the company. I manage a group of like 100 professional traders here at T3, but it's definitely worth it with what's going on right now. You got it, Jared. It's definitely worth it with what's going on right now to briefly discuss retail trading. So we had 0 problems here at T3 with our retail accounts over the course of the last couple of weeks. And all of these brokerages had issues. I'm getting calls left and right. People are complaining to me about Schwab, E-Trade, TD, Robinhood. I'm getting calls left and right from people. My platform doesn't work. I'm buying positions. It's not telling me that I'm in the position until 45 minutes after I'm in it. You cannot be an active trader and be involved in those brokerages, in my opinion. If you are trading with free commissions, you're not trading for free. You're just not trading with a commission cost. Instead, you have a performance drag because they're selling your orders out to HFT firms. I think all of that is a disaster if you're an active trader. If you're an investor, if you just buy a few things a quarter and you buy and hold, those are great places to have your account because they're keeping your costs low. And honestly, if you plan on holding something for a year plus, who cares if you got a couple pennies worse on the entry? But for myself, I regularly trade somewhere between 1 million and 2 million shares a month. I can't trade with, I can't get robbed by those HFT firms in every transaction that I place. So at T3, our retail accounts have had 0 downtime, 0 lag over the course of the last couple of weeks. No restrictions on GameStop, AMC, NOK, Bed Bath & Beyond, any of those names that were mentioned earlier. Everything worked as normal, as it should. So if you take yourself seriously as an active trader, you don't necessarily have to become a professional prop trader like I am, but you should at least have yourself on some professional software. So T3's edge is direct market access on a professional platform at a low commission cost for retail traders, for the active trader specifically. The software is Sterling Trader Pro. It's a great software. You have direct market access. We do not sell your orders out to HFT firms. We do not sell your orders out to HFT firms. It's so important. There is a little bit of a platform fee. I can discuss that. If anybody reaches out to me, we can talk about it. And then there's a straightforward commission cost that you pay because, again, no one in finance is working for free. Let's be honest about it. That includes myself, that includes T3, that includes whatever your broker is. No one is working for free. So if you think that you're trading for free, you got to be asking yourself, well, how am I trading for free? Because you're not. So that's a brief overview on retail accounts. Again, just email me if you have interest. The pro accounts require licensing. You have to pass an SIE and a Series 57 examination. We have offices on the East Coast. New York City, Manhattan's our headquarter office. I'm typically running our Manhattan trading floor. It's basically myself and Scott Redler in there on a day-to-day basis running a big trading floor. But that's been closed for almost a year now. I've been traveling across the country. I am in Idaho right now. I am now looking out the window at the 3 peaks of the Grand Teton Mountains out my window here. It's phenomenal. And not to mention the waist-deep powder I've been skiing these last couple of weekends at Grand Targhee and Jackson Hole. Eventually we're going to get those offices back open. Right now everyone's trading remotely. Everyone has access to the virtual trading floor that I run. I'll talk about that in a minute. So again, like I said earlier, all the traders have to be licensed. There's a quick background check to become a professional trader. Once those tests are passed, we have 3 different trading software options: Lightspeed, Sterling Trader Pro, and Wolverine, also known as WEX. Our retail accounts are specifically Sterling Trader Pro. We have equities, we have futures, we have options, so equity options on futures as well. If any of these products interest you, reach out to me and I can speak to you on it myself. I actually spoke about options here just a minute ago when we were looking at charts about why I don't trade them, but we do have option trading available as well. So if you're interested in that, reach out to me and we can have a conversation about it. The biggest advantages of joining T3 as a professional trader is basically twofold. First is capital access, which I'm going to talk about in a second. We provide our traders whatever you fund your account with. We basically give you 20 times that for day trading and 8 times that for overnight positions. So if you are a trader and you put $50,000 into an account, we're basically going to allocate you $1 million to work with on an intraday and $400,000 to work with on an overnight basis. We can actually increase those numbers. We wouldn't do it right away. So that's one major advantage, especially for experienced people, is that capital access. The other is the education. I put a lot of work into the people that I work with on a day-to-day basis. I run the morning meeting every day at 9 a.m. Eastern. I run the afternoon meeting every day at 10 after 4. Every afternoon meeting is in a Q&A. I've created a training program that consists of a series of video lectures. You get access to all of that just by nature of having an account with us. We are incentivized here at T3 to see the traders that we are working with succeed. I don't want, you become a professional trader. I'm not charging you money for access to my training program. It's free because if you're successful, you're going to make money. If you're making money, the firm is making money. It's a win-win scenario. Our incentives, the incentives of T3 and the incentives of the incoming trader are in line. And that's a beautiful thing. So you're going to get access to a whole host of training and development. Again, funding your account, I mentioned this briefly. You contribute a capital contribution to fund your account. We give you buying power at 20x and 8x. For experienced traders, we're a great spot to come to because of our size and our capital access. If you want to open up $1 million prop account because you want access to $20 million, it's no problem. Reach out to me. We work with people as small as $10,000 and as big as into the millions. So it's totally up to you. No matter what, we can basically give you access to those same leverage ratios, 20x and 8x, and then you're paid as a profit split. So in a retail account, you don't get that same capital access. You're subject to FINRA's Reg T margin, which is 2x for overnight and 4x for day trading. In a prop account, we can give you as much capital as we want, but you're also not keeping 100% of your profits. So we're going to start you with a profit split, but that profit split is very generous in the favor of the trader. So again, reach out to me. Here's my email address on this slide again. Reach out to me and we can discuss more information on any of that. And again, you're going to get a whole host of access here by being a trader with the firm. You get access to my VTF, which is called ProDesk, for free. It's a $2,000 a year value. You get access to my training program that consists of about 13 or 15 lectures. Each one's over an hour. It's probably $1,000 value. You get access to Scott Rudler's VTF Trader Hub, another $2,000 a year value. You get access to Rudler All Access, $1,300 a year value. Why are we giving all of this stuff that has so much value away for free to the traders that are at the company? I already said it. Our incentives are in line. If this stuff is going to help you be more successful as a trader while you are with T3, that's going to make you money. That's going to make the firm money. If anybody wants to buy my training program for $1,000, I got no problem selling it to you. Reach out to me. But I would rather give it to you for free and have you actually trade as part of my team. So reach out to me. Here's my email address. You want to talk about markets? Let's do it. Again, these weekly webinars, I try to give you guys little tidbits on what it's like to be a professional trader, how a professional looks at markets, a couple key themes every week that could help you with your trading. But that's just a taste of what you actually get by being part of the firm. So you want to talk about markets, you want to talk about being part of T3, you come in a Ski Jackson hole at some point in the next month, reach out to me. Happy to meet up, happy to chat. These are the things I'm passionate about, so I have no problem doing this all day, every day. All right, guys, I'm going to jump back to my trading. Glad that there was some good participation today here in the YouTube channel. Hope everyone was able to learn something. Hope everyone has a great, profitable week. And I will see everybody soon. See everybody next week.